Hey, how is it going, people? Welcome back to my screen. My name is Best Man Makri, and very shortly we will be breaking down the market for you guys so we can identify trade opportunity and put money in our pocket. Alright, if you join us for the first time, you're welcome to Traders Advocate, a channel built and dedicated into helping struggling traders become profitable forex trader. And the goal of the channel is to help you ultimately know how to trade properly, not teach you or show you hypothetical stuff that don't work, like how I turn $5 to $1,000,000, the best 1 hour strategy. None of all those nonsense works. All right, the goal of this channel is to equip you with the right skill set by showing you the thought process of a profitable forex trader. And in front of us, we will be breaking down BTC. All right, sorry you'll not be seeing my face on the screen. That is not important. What is important is you having the right skill set, the right knowledge derived from this channel, not my appearance. All right, so let's start breaking this pair down so you understand what we are looking at for the upcoming week. So this is the BTC chart, and obviously the market is bearish. It is bearish because it checks all the characteristic of a downtrend. I think that again, the market is bearish. Why is it bearish? Because it checks all the characteristic of a downtrend. This is a high, this is a low, lower high, lower low, lower high, in a lower low. Okay, this low is not significantly lower than this, but we've come in for the third touch of this trend line. So you can see we are hanging for dear life. This market is hanging for dear life. We are having difficulties rolling all the way to the downside. Why so? Because of this descending trend line coming up from the bottom. And the third touch, principle of price action states the third touch of a trend line does the reversal. All right, so this is the first touch, this is the second touch, and this is the third touch. And this month candle is looking healthy, is looking strongly bullish. And today is the 19th of July. We have this candle being bullish, bouncing off from this area. Now we can't really interpret what's going on here, so we go to the weekly to have a proper understanding of the interpretation of what's going around this area. Sorry, pardon me. On the weekly, we can see several weeks of trading being bullish. This just tells you the bears has lost its selling pressure to draw BTC to the downside, and we've pretty much violated the bearish trend line. So if I draw my trend line, we've broken above the bearish trend line, broken above it, was pretty much stalling around this area. Cool. So now what's next for BTC? Okay, now if you look at this properly, you'll notice we're trying to form what they call an inverse head and shoulder pattern. This is the left shoulder, this is a head, this is a right shoulder. You won't see it properly on the weekly. On the daily time frame there, you will see the head and shoulder pattern. Left shoulder, head, right shoulder. Inverse head and shoulder pattern have bearish reversal short pattern. They can't reverse a trend from being bearish to being bullish. I think that again, inverse head and shoulder pattern have bullish reversal sharp pattern. They are bullish reversal sharp pattern. They have the probability of reversing a trend, not a must. Don't get me wrong, not the most. Sharp patterns, regardless of the time frame they occur, they can't be invalidated. Yes, but the higher the time frame, the higher the probability of the sharp pattern playing out. I must have to say that, right? So you don't get confused. So the inverse head and shoulder pattern is pretty much telling us that this bearish trend will reverse from being bearish to now being bullish. At this point, we should be looking for some push to the upside. Take that again. The inverse head and shoulder pattern is telling us, look, we've pretty much come into the third touch of this area, and the market has built a case as to why it wants to reverse, giving us an inverse head and shoulder pattern, left shoulder, head, right shoulder. This area marked with the gray bar is the neckline or shoulder line of the inverse head and shoulder pattern. I'm pretty much playing around this area. So is it time to start buying yet? No, it's not time to start buying yet. All right, we need price to break above the neckline or shoulder line of the inverse head and shoulder pattern. And it obviously look clear if you pretty much have had struggles around this area before in the past. So we need price to at least come back here. With the rules of engagement, we will need price to break above here. If you see a break above here, so something like this, a break above the neckline, a healthy break above the neck, not a weak, a fully formed daily candle close above this area. That does not mean you can click buy. We don't buy at the breakout. Never buy at the breakout. If you buy at the breakout of an head and shoulder pattern, inverse head and shoulder pattern, double bottom, double top, you may be likely prone to market manipulations. Yes, so don't buy at the breakout. Wait for price to break above here. Then wait for price to pull back for a retest of this support area. So wait for a breakout, a retest, and again, don't buy a support, neither do you sell at resistance. If you buy a support, sell at resistance, you're prone to market manipulation. All right, wait for price to break out, pull back, wait for a bounce, a bullish candlestick bounce. Then we'll go to the 4 hours time frame. On the 4 hours time frame is where we will come and execute our trade. So we need price to break out from here, pull back, wait for a bounce of this area, then a break of our counter trend line, you can come in for a buy, something like this. Let me use a previous price action to explain for you. So we'll draw our counter trend line, have the waves off, right, and wait for a 4 hours break of our counter. Once we have a 4 hours break of our counter line, we can start buying all the way to the upside. So you have to use previous price action to explain my entry methodology so you understand how I trade. So yeah, so wait for the breakout here, price to pull back here, wait for you bounce. On the 4 hours time frame, we will draw our counter trend line at the waves. Once price, we have a 4 hours bullish candlestick break of our 4 hours time frame counter trend line, we can start buying all the way to the upside. Once this will be my first target. Once price comes in here, I'll be locking in significant amount of my profit. Pushing my stop loss past break even anticipation, we might actually experience a further push to the upside. So around $74,000 per coin will be the nearest target for BTC. Yes, you heard that right. $79,000 per coin, $74,000 per coin will be the next target for BTC. If we break above here and we pull back for here to this level, we bounce somewhere, we are heading all the way to the upside. Let me zoom out a little bit to see if there will be any evil. No evil spirit. No evil spirit. So if we take out this level, we are coming down here. Now more so, I have to be very honest with you guys and keep it real with you guys. In this scenario, price we start seeing some redness around this area. Underneath this area, we start seeing some redness around this area, and we start pointing down. Especially if price comes and take out this area, we might actually experience a decline to the downside. I think again, if you start seeing some bearish candlestick play around this area and price start pointing down, and we take out this area, we might experience a decline to the downside. So if we break out from here, we can start pushing all the way to the downside. And if price obviously comes and take out this area, probably mark this area. Okay, cool. Now let's go back to the daily. Let's talk some real fact. Okay, all right, cool. So if we see some bearish candlestick bounce here, obviously we started coming, we'll start pointing all the way to the downside. If for me, being a conservative trader, the only time I was interested in clicking the sell button is if price comes and I see a close, right, a bearish candlestick break of this area, then I was interested in selling BTC, right? I'm not interested in clicking the buy button or sell button between this high and this low. Okay, you can play around here for a couple of days. You never can tell. The market can take its time, play around here for a couple of days. Right, so what am I doing? I'm building a contingency plan in the scenario price doesn't go the way we planned earlier on, so I know what to do. Right, so the only time I'll be interested in clicking sell is if price comes and take out this. If I see a breakout of this here, then I'll be selling all the way to $52,000 per coin, will then be the nearest support area for BTC. So if price takes out here, I'll be selling all the way here. If price break above here, I'll be buying all the way to $34,000 per coin. So that's it for BTC. Also, I think this trend line is also here. We have this trend line. So yeah, so once price start coming down here, once price start pushing all the way to the upside, you might as well want to lock in significant amount of your profit in a scenario price doesn't really touch here. but I feel we might actually blow all the way to $74,000 per coin. But this guy, you can't deny this straight line being here. All right, so that's it for BTC. Let's look at the dollar index. Dollar index has done its madness, right? We've pretty much has been consolidating for the better part of last year up till now to this year. We've traded between this high and this low, and for the first time in a long time, we've broken above the range. So it was a simple breakout above the range. We pulled back for a retest of this area. We had this bullish pin bounce from this area. It was a simple breakout, a retest. And I remember stating clearly that at the break of our counter trend line, we can jump in for a buy position to the upside. I must say at the break of our counter trend line, we should be looking for buying position to the upside. Most person will bought here. This is not a significant break. I saw this, I ignored it, guys. I saw this breakout, I ignored. This is not a significant break. I must have to say the truth. I saw this, I ignored it. This candle didn't close significantly higher on the trend line. This trend line coming from here. And what happened? Stop loss became the case. People who bought somewhere around there, the stop loss would have been somewhere around there, or maybe here. This probably would have hit their stop loss, or this candle would have probably hit their stop loss, and it now becomes a losing trade for them. So what's next for this guy? My bias on the dollar index is still bullish. I'm still bullish on the dollar index, although pretty much I've been hearing some funny news from fundamentals, not pretty much sitting well with the US economy, but let's see how it goes. Yeah, so the only time I'll be interested in clicking back is if price comes and break above here. Price needs to come and break above here, then I'll be interested in going long for BTC. I need price to come and break above here, and that will be the only time I see a proper break above here, not a fake out, a proper, a healthy candle break above here, then I'll be interested in going long for BTC. But in the scenario we start pointing down and we take out this level, the whole buy setup has been violated, guys. It means dollar will tank. Dollar will have to tank. Dollar will tank all the way down here. This is the nearest support supply demand area. Dollar will tank. So if the scenario will break below here, so don't worry, guys. If the market will break below here, we'll be looking for a selling position to the downside. So a break out of this, a break below here, a retest of this area, we'll be selling all the way down here. All right, I'll be selling all the way down. This will be my first target, but I hope that doesn't happen. Because if the market starts selling all the way, if the dollar index starts selling, that means all the major currency pair will be buying. You have to understand that the dollar index is the OG of all the major currency pair. If it's bearish, all the other major currency pair will be bullish, and if it's bullish, the other major currency pair will be bearish. And also, the dollar index is the inverse of the Euro USD. If you turn the Euro USD chart upside down, you're getting the dollar index. All right, so but as traders, we don't force the hands of the market. We are reactors. We react to what the market is said. We don't force the hands of the market. If the market wants to sell, we will be looking for selling position to the downside. If the market wants to buy, we will be looking for buying position to the upside. This is looking like a beautiful flag pattern as from X to the A to the B to the C to the D, maybe to the E, and we can start pushing all the way to the upside. But the only time I will be interested in going long is if we have a proper healthy, in fact a daily candle close above here, then I'll be interested in going long for BTC. But in the scenario we start coming all the way to the downside, guys, it's a sell position to the downside. So if I'm buying, where will be our overall target? If you are buying, our overall target will be somewhere around this year. Sorry, our overall target will be somewhere around this area. My first level TP target will be here. Yeah, with my overall target, this is my first level TP target. In the scenario the market wants to sell and we start reversing all the way to the downside, we have my first target will be somewhere around there. My overall target will be coming somewhere around there. So we have space to play with it, regardless of where the market wants to head to. All right, so let's look at the Euro. All right, the EURUSD chart we also bearish. The bias is we are bearish. Like I told you guys earlier on, the EURUSD chart is the inverse of the dollar index. All right, you can see we were in a range consolidating for several years. The market was trading between this high and this low, and it looks like we've broken below the neckline, not the neckline. We've finally broken below um the range, finally broken below the range. So it was a simple fake out. The market broke below, pull back here for a stop loss on, and we are currently trading above this resistance area, which has now turned support. Yes, maybe the market wants to maybe do feel some technical level, maybe come in for a touch of this trend line, which is also if you go on the 4 hours time frame, you see a supply area around here. So maybe you want to do a touch of this supply area or this trend line for actually collapsing all the way to the downside. I don't know. I'm not gonna lie I'm not gonna obviously come here and lie to you guys, like act like if I know where the market wants what to do next. All right, my job is to predict the market, right, not to oscillate the market movement. All right. So the only time I'll be interested in going short, I'm still 60% short. I'm 60% sure this market is going down. I'm 40% sure this market will go up. So the probability of this market going down is 60%. The probability of this market going long is 40%, right? So I'm going to explain earlier on why I have this bias as to why the market will reverse to the downside, right? So the only time I'll be interested in going short is if we have a breakout, a daily candle breakout of this area, right? If I see a daily candle close below this area, and more so this area has to be taken out. If price takes out this area, I'll only click the sell button if price comes and take out this area, right? This was the area most persons, so people who sold last, most people would have drawn their counter chain line like this. And what happened, thinking this was a breakout, and what happened, price came, hit their stop loss, and started trading above here. Now I told you earlier on the past episode that I'm not convinced about this pullback. This pullback is too small. I think I'm lying. Watch up this episode where I called it out. I called it out. I'm not too convinced about this breakout. Not too convinced about it. And what happened in the market that's kind of pushed all the way to the upside. So the only time I'll be interested in clicking the sell button is if price come and take out this trend line in confluence with this area. Once I see a breakout of here, I'll then be interested in clicking the sell button. Or maybe price might actually pull up to do a touch of this supply area, or maybe this other area. There's also another supply area somewhere around here, and I'll touch this trend line before actually coming all the way to the downside. But the only time I'll be interested in clicking the sell button is if we have a breakout of this area. So all things being equal, let's sit on our hands and allow the market to decide what it wants to do. All right, so I'm looking at this from the monthly time frame. This is still bearish, guys. The market is still bearish. Yeah, the market is still in a bearish trend. This is just an immediate trend moving against a major trend. I'll pretty much run into the third touch of the major trend. All right, so this is the first touch, second touch, third touch, and normally the third touch normally does the reversal to the downside. So a proper breakout of here, guys, we will be selling. All right, look at this on the daily time frame. This was just a fake out, and we are still trading above inside of this range. So we need a proper breakout, then we will be selling. So that's it for the euros. Let's look at GBPUSD. GBPUSD, I told you guys the last time that if you see some bullish candlestick bounce from this traditional line, we might actually experience a push to the upside. And what has happened? We pushed all the way to the upside. I'm still bearish on on the pound sterling. I'm not gonna lie, I'm still bearish on the pound sterling. The only time, guys, I'll be interested in going short is price coming back to take out this area. Once I see a 4 hours break of this area, guys, I'll be clicking the sell button. Come here, take out this area. My overall target is here, but my first level target is here. Why? So because if you look clear, we've had interactions with this place before in the past. First, into the struggle. We struggled, we broke above, we retest it, we push all the way to the upside, coming down, we kissed it, we came down, broke above, we retest it. So best believe this market is coming down here. This area have the probability of sending price all the way to the upside. But if we take out this area, we are coming down. So let me teach you guys on how I trade, right? So this happens when this market comes down here and I sold. Once price comes in here, I'll be locking in my first position entirely as profit. I'll close out my first trade entirely as profit. Then on my other position, I'm going to push my stop loss below, a little bit below where I sold from. So on my first trade, I've taken out my profit, right? On the second trade, I've not closed the trade. I've secured a little bit of profit, a minute bit of profit, in anticipation that my second trade will get to my overall target, which is here. Now, why am I doing this? Because I'm a swing trader. I love to take out something from the market. Why? Because I will trade for several weeks. Anything can happen within those several weeks. And the worst thing that can happen to you is price coming in here and reversing all the way to the upside. So you'll be in a lot of profits only for price to come into an area where you ignored or didn't see and start reversing all the way to the upside, or start reversing all the way to the opposite direction. The worst thing that can happen to you as a trader, you become very revengeful, because price may even come and threaten your stop loss. Worst scenario, smash your stop loss. And you'll be like, I've been in a lot of profit, I was in profit, and before you know, your next line of action will be to revenge your earlier position, right? So you start looking for selling position, think, okay, I sold before, I was in a lot of profit. You'll be looking for selling position, not when the market has come into an area and wants to reverse and move to the opposite direction. You keep placing sell order and you keep incurring losses. So that one losing trade now become a portal of series of losing trade. So this trading methodology helps me keep me in the confinement of profit. It helps me sleep. It helps my trade risk-free. Yeah, it helps my trade to be risk-free, okay? So once price start coming if you take out this level, I see a proper breakout, a retest of here, obviously, guys, I'll be looking for selling position all the way to the downside. My first target will be here. My overall target is somewhere around there. So we have all these. This is 1,000 pips to the downside. But in this scenario, we break above this area. It break above this area. The possibility of the market pushing all the way to the upside will be here. But I'll not be clicking the buy button yet. Break above here, I'll not be clicking the buy button. The only time I'll be interested in clicking the buy button for this guy is if price comes and take out this area. If we break above this area, then we can fully state that this trend has been violated completely from being a bearish trend to now being a bullish trend. Why? So the principle of price action state in a downtrend, price should be creating lower lows and lower highs while maintaining the high. So if price breaks above here, it means we violated the rules of a downtrend. We pretty much broken above this high, and that means this immediate trend will now be the major trend, and that's violated the bearish trend line. So yeah, every time I'm interested in clicking the buy button, break above here. But until that happens, this is the neckline of the head and shoulder pattern. Left shoulder, head. These are just right shoulder. Price comes and take out this area. It's a reversal to the downside. Now let's look at one more trade, and then we call it a day on today's episode, right? Let's look at gold. Is it gold? No, I don't talk about good, guys. Let's look at this trade. What is it called? Japan 225. I saw this trade, guys. I don't normally trade this. A friend of mine actually recommended it. So look at the trade for me and see what's going to happen. I told him it's going to sell, and what happened? It's pretty much, came all the way to the downside. I'm going to explain what happened. So this is a bullish trend, listen all the way to the upside, and pretty much this market has created an all-time high. So for every all-time achievement, whenever the market achieve a new all-time high, best believe investors will close position as profits, hence the market will pull back a little bit before actually to the nearest support, before actually continuing going to the upside. So once price came into this level, which was the all-time high for the Japan 225, anticipated back to the downside, right? On the daily time frame, you can see Started moving sideways, sideways, sideways. So once I saw this breakout, a fake out, a fake in back, notice would have jumped in, thinking this is a fake out, probably would have jumped in here, I think market would start pushing all the way to the upside. What happened? Price came back and smashed there. So once I saw this area, price coming back here, I knew for a fact with a simple counter trend break. So once price came and I saw this bearish candle close here, immediately I told him jump in on the sell. And what happens? Stop loss comes above here, price comes in here. I told him close all your position here. All right, this is the nearest support. And what happened? I told him close all your position, and I believe he must have closed all his position because price can come in here and push all the way to the upside. Like I thought, this move to the downside is not meant entirely to reverse the trend from being bullish to being bearish. This is as a result of profits taken from investors, dividend being paid, and this bearish crash to the downside. It's also possible the market can actually maybe just pull back a little bit to do a touch of this area. So if you see a breakout, I'm closing watching this. If I see a proper breakout, pardon me, a proper breakout of this area, a retest of here, maybe we might actually come in here before actually pushing all the way to the upside, maybe to do a touch, a sector touch of this trend line before actually pushing all the way to the upside. I'll be closing watching this and see what happens, because here a breakout here, a retest here, we are coming down into this level, maybe to touch this trend line before pushing all the way to the upside. All right, that's it for today's episode. If you've pretty much enjoyed this episode, please hit the subscribe button, the bell notification, and tell us how you feel about our videos. Yeah, I'll catch you guys on my subsequent video. Peace and love.